Hello and welcome back to Algobot, your home for clear, educational breakdowns of automated trading strategies for MetaTrader 5. I'm your host here at Algobot, and in today's video we're taking a close look at an expert advisor called the Closing Range Thrust Scalper. This is a pure price action strategy, which means it uses no indicators at all. Instead, it reads the raw geometry of a single freshly closed candle to spot momentum continuation. By the end of this video, you'll understand exactly how it reads the market, how it enters and exits its trades, and what every single setting does. So let's get started. So what exactly does the Closing Range Thrust Scalper do? At its heart, this expert advisor is a momentum continuation scalper that works purely from candle geometry. There are no moving averages, no relative strength index, no average true range, and no oscillators of any kind. Every decision comes from just four numbers on a single candle. It's open, it's high, it's low, and it's close. The central idea is something traders call the closing range location. That simply means, where did the candle close inside its own high-to-low range? A candle that opens near its low and pushes its close right up into the top of its range is showing us that buyers won control during that bar. The mirror image, a candle that closes down near the bottom of its range, shows sellers in control. The strategy reads that footprint and then trades in the same direction as the move, aiming to ride the continuation rather than betting against it. This approach is designed for short-term, intraday trading on faster time frames, which is exactly why it's described as a scalper. It can be applied to many markets, such as the major foreign exchange pairs, but the logic stays the same everywhere because it depends only on price itself. In terms of who this is suited for, it's an educational example for traders who are curious about systematic, rules-based price action, and who want to see how a clean set of conditions can be turned into an automated system. It is not a recommendation to trade, and it is certainly not a promise of any particular outcome. Like every strategy, it will have winning trades and losing trades, and trading always involves real risk. Throughout this video, please treat everything you hear as educational information only, and never as financial advice. Let's walk through the exact logic, step by step. The strategy only does its work once per freshly closed bar. On every tick, it checks whether a new bar has opened, and if not, it simply waits. This means it studies completed candles, not the half-formed bar that is still moving. Once a new bar opens, the expert advisor looks back at the candle that just closed. We'll call that the thrust bar. It also looks at the bar immediately before it, which provides the local structure to break. The first thing measured is range expansion. The strategy adds up the high-to-low range of the recent window of bars and works out the average. The number of bars in that window is set by the range period input, which defaults to 14. The thrust bar's own range is then compared against that average. To qualify, the thrust bar's range must be at least the thrust multiple times the average, which defaults to 1.3. In plain terms, the candle must be meaningfully larger than the recent norm, so the strategy ignores quiet, sideways chop. Next comes the closing range location. The strategy calculates where the close sits inside the candle's range. For a long, the close must land within the top portion of the range, defined by the close location percent input, which defaults to 70%. That proves the close was genuinely pushed toward the high, rather than finishing in the middle like an indecisive candle. The third condition is the breakout. For a long, the close must finish above the prior bar's high. That confirms the move actually broke local structure, instead of staying trapped inside the previous candle's range. When all three of these line up on an up candle, the strategy signals a continuation buy. The short side is a perfect mirror. A down candle that expands, closes near its low, and closes below the prior bar's low signals a continuation sell. Now for risk management. On a long, the stop loss is placed just below the thrust bar's low, with a small cushion set by the stop buffer percent input. The distance from entry to that stop becomes the risk. The take profit is then placed at a multiple of that risk, set by the RewardRisk input, which defaults to 1.5. A spread filter skips the trade when the spread is too wide, and only one position is allowed to run at a time. Now let's read through the actual MetaQuotes language code you see on screen, just as it appears in MetaEditor. At the top are the input parameters. Range period sets how many bars are averaged to define the recent normal range. A larger value makes that average smoother and slower to react. Thrust multiple is how many times bigger than that average the candle must be. Raise it, and you demand more decisive expansion, so fewer setups appear. Close location percent controls how close to the extreme the candle must finish. Push it toward 95, and only the most one-sided candles qualify. Reward risk sets the take-profit distance as a multiple of the measured risk. Stop buffer percent adds a small cushion beyond the candle's extreme for the stop. Max spread points blocks entries when trading costs are too high, and lot sets the fixed position size. Below the inputs is the core signal logic. The code first computes the closing range location two ways. Close from low measures how far the close sits above the bar's low, as a fraction of the range, where 1.0 means it closed right at the high. Close from high is the mirror for the downside. Then the bullish condition is assembled. It is true only when the candle closed above its open, when close from low is at least the required location, and when the close finished above the prior bar's high. When that holds, the entry is taken at the ask price. The stop loss is set just below the thrust bar's low minus the buffer. The risk is the gap between entry and stop, and the take profit is the entry plus the reward risk multiple of that risk. The sell branch mirrors every line for the downside. Let's bring this to life on the chart. On the left, you can see a stretch of small, quiet candles. Their ranges are narrow and similar, and together they define the recent average range that the strategy is constantly measuring. Now watch what happens next. A much larger up candle forms. Its range is roughly 3 times the recent average. It closes right up near its high, and crucially, its close finishes above the previous candle's high, clearing the upper breakout line marked on the chart. All 3 conditions are now satisfied, so the strategy signals a continuation buy, and you see the buy entry marker appear. The stop loss sits just below that candle's low, and the take profit is placed at a reward to risk multiple above the entry. Over the next few candles, price extends higher and reaches the take profit marker, completing the long example. Now watch the second half. Price stalls and prints another cluster of small, quiet candles, which resets the average range. Then a large down candle forms. Its range expands well beyond the recent norm. It closes down near its low, and it breaks below the previous candle's low, clearing the lower breakout line. That mirrors the long logic exactly. So the strategy signals a continuation sell, and the sell entry marker appears. The stop loss rests just above that candle's high, and the take profit is set a reward to risk multiple below the entry. Price then slides lower into the take profit marker. Notice there are no oscillators here at all. Every decision came purely from the size of the candle, where it closed inside its range, and the level it broke. That is the entire read. And that brings us to the end of our breakdown of the Closing Range Thrust Scalper. Today we covered how this expert advisor reads the closing range location of a single candle, how it confirms momentum with range expansion and a structural breakout, how it enters both long and short, and how its stop loss and take profit are calculated from pure price geometry. Remember, everything in this video is educational information only and not financial advice. Every strategy has both winning and losing trades, and trading always carries real risk. If you found this helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 breakdowns. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.